Silver's Judgment Day, the 2026 Ghost in the Machine, Part 1. The date is Friday, February 27th, 2026. While most of the world is distracted by the noise of mainstream headlines and political theater, a silent alarm is screaming in the vaults of the LBMA and COMEX. If you look at your screen right now, you see a price. But what if I told you that price is a mirage, a mathematical ghost kept alive by a dying paper system? For decades, the silver market has been the most manipulated asset on the planet. But on Monday morning, at the opening bell, the physics of supply and demand are about to collide with the fiction of digital trading. We aren't just looking at a price increase, we are looking at a structural fracture of the Western financial system. Let's look at the logic. In 2024 and 2025, the silver deficit was a concern. In 2026, it has become an emergency. Global silver inventories have plummeted to a record low of 820 million ounces below industrial requirements. Why does this matter for Monday? Because the U.S. industrial complex, from the AI chips powering Silicon Valley to the massive solar grids in Texas, is now competing directly with the investment whales. For the first time in history, the tech giants, Apple, Tesla, and Nvidia, are realizing that without physical silver, their 2026 production lines stop. They are no longer buying contracts. They are demanding physical delivery. When the market opens this Monday, the commercial shorts, the big banks, will face a nightmare. They have sold 300 ounces of paper for every 1 ounce of physical silver sitting in their vaults. The math no longer works. This Friday, February 27th, marked the first notice day for the March contracts. Usually this is a boring technical event, but today, something shocking happened. Institutional investors, the smart money from Singapore and the Middle East, refused to roll over their contracts. Instead of taking a cash profit, they stood for physical delivery. This is the Black Swan event. If these institutions demand their metal on Monday, the COMEX will have to admit the truth. The cupboards are bare. In the VIP trading lounges of London and New York, the word force majeure is being whispered. This is a legal clause that allows an exchange to settle in cash because they literally cannot find the metal. If force majeure is declared this week, the price of physical silver will decouple. The paper price might show $90, but the physical price at your local dealer could jump to $150 or $200 overnight. We are currently sitting in a coil. Silver has been consolidating between $88 and $91 for weeks. This is a spring being compressed by massive gravitational force. On Monday, if silver opens above $92.50, the algorithms will trigger a gamma squeeze. Short sellers will be forced to buy back their positions at any price to avoid bankruptcy. This forced buying is the fuel that will rocket us past the $100 psychological barrier. Once $100 falls, the hype will take over. But the logic tells us that $100 is actually the fair value based on inflation-adjusted 1980 highs. We aren't in a bubble. We are in a correction of reality. As we head into this weekend, ask yourself one question. Do you trust the digital digits on your bank app, or do you trust the physical metal that powers the modern world? The opening bell this Monday isn't just a trading signal. It's an ultimatum. The era of cheap, manipulated silver is dying. The era of the industrial gold has begun. In Part 2, I will reveal the exact kill zones where the banks will try to tank the price one last time before the $100 breakout. You cannot afford to miss it. While the retail world is looking at simple charts, something much more sinister is happening in the dark pools of the repo market. The big banks know that Monday's open is a trap. They are caught in a liquidity vice. On one side, they have massive short positions that are bleeding billions. On the other, they have a global industry that is starving for physical metal. But here is the shocking logic. The central banks are not trying to save the price of silver anymore. They are trying to save the US dollar. If silver hits $100 and stays there, it exposes the total loss of purchasing power of the fiat currency. To prevent this, they have created what we call the kill zones. Before we see the rocket to $150, the banks will attempt one final violent stop-loss hunt. The logic of the 2026 Green Revolution is the final nail in the coffin. We have built a world that cannot function without this metal, yet we have priced it like a discarded byproduct. On Monday, when the industrial buyers see the price gapping up, they won't wait for a dip. They will engage in panic buying. This creates a feedback loop. Higher prices lead to more panic, which leads to even higher prices. This is how a commodity verticalizes. This is not a drill. The system is breaking. When you see the opening bell on Monday, look past the red and green candles. Look at the volume. If the volume is 5x the average, you are witnessing the great decoupling. The strategy is clear. 1. Protect your physical. Do not trade your physical metal for paper profits yet. 2. Watch the $92.20. Pivot. That is your confirmation of the 2026 supercycle. 3. Stay logical. The banks will use fake news to shake you out. Trust the deficit, trust the math, and trust the money untold X logic. The era of $20 silver is ancient history. The era of the 100+ reality starts now. Silver's Judgment Day. The Endgame, Part 3. The paper to silver paradox. 0 duaro, 4 coins. As we approach the Monday opening bell, we have to address the elephant in the room. For every single ounce of physical silver held in a vault, there are currently over 400 ounces of paper silver traded on digital exchanges. This is the paper paradox. Think about the logic. If only 1% of paper contract holders demand their physical metal on Monday, the system collapses instantly. We are no longer talking about a market correction. We are talking about a systemic default. In Part 1 and 2, we discussed the deficit and the kill zones, but Part 3 is about the moment the music stops. When the whales realize there aren't enough chairs for everyone, the rush to the exit will be the most violent financial event of 2026. The ghost supply of 2026, 4 7 mark. There's a shocking truth that the LBMA doesn't want you to know. A large portion of what is reported as available silver is actually re-hypothecated. This means the same bar of silver has been promised to 5 different buyers. On Monday, as the price crosses the $95 mark, the force majeure we whispered about in Part 1 becomes a high probability reality. When an exchange tells a billionaire, "We can't give you your silver, here's a check instead," the billionaire doesn't take the check and go home. They take that cash and buy every physical coin, bar, and mine share they can find. This is how you get a vertical spike, a candle on the chart that looks like a straight line to heaven. The $120, $150 to fair value reset, 7 hours, 10 wars. Let's talk about the 2026 reset. If we take the 1980 high of $50 and adjust it for the massive money printing, M2 money supply of the last 2 years, the fair value of silver isn't $30 or $50 or even $90. The math points directly to $140 to $50 per ounce. Monday's opening is the first step toward this price reset. We are moving away from silver as a commodity and towards silver as a Tier 1 asset. As the US dollar faces its 2026 inflationary crisis, the logic over hype community knows that silver is the only life raft left. We are witnessing the death of a 50-year manipulation scheme in real time. The exit strategy. When to sell? 10 per termino. The most common question I get is, if it hits $100, do I sell? The logic answer? You don't trade a generational wealth asset for failing currency unless you have to. In 2026, silver will become a currency of last resort. Watch the gold to silver ratio. Historically, it sits at 15:1. Right now, it's still lagging. When that ratio crashes toward 21 or 15:1, that is your signal that silver has reached its peak. Until then, every dip manufactured by the banks in the kill zones is simply an opportunity for those who missed the boat. Final thoughts. The Monday legacy, 13's 15 org. The opening bell is hours away. The charts are primed. The deficits are real. The banks are cornered. This isn't about being lucky. It's about being positioned. While the world wakes up on Monday to a shocking price gap, you will be sitting calmly because you followed the logic. You understood the 820 million ounce gap. You saw through the kill zones. And you realized that 2026 is the year the money untold finally gets told. Monday is not the end. It is only the beginning of the great silver bull.